Brazil, in addition to issuance of a digital appropriate technology for its implementation in Brazil. In this third meeting, we will focus on offline operations. We will analyze secure ways to verify transactions without the use of the internet and see the feasibility of applying the digital real. For today's roundtable, we have foreign speakers, so the event will be in English with simultaneous interpretation into Portuguese. Here below in the description of the video, we have the link for the video in English, for the presentation in English.
The third webinar of the Brazilian Digital Real. It is with great pleasure that we start the third webinar on the Real Digital. This webinar will discuss the feasibility and necessity of incorporating dual offline solutions into the infrastructure of the Real Digital. We all know that this means a challenging task, which is the integration of the online world, where all transactions can be verified instantly, with an offline world that must deliver instant payment transactions with finality, which means that they are unconditional and irrevocable transactions. I will make a very short presentation on the topic, just to let you know what we actually mean by offline payments in this context. Okay, so first of all, it should be clear that we mean by offline, or actually by dual offline transactions. We are considering those use cases where both payer and payee are offline for whatever reason, but they are still able to be paid in an instant and final transaction, where CBDCs move from the payer's wallet to the payee's wallet. For instance, it could be that they are in a remote area with no connection, or maybe that the use case requires a very quick transaction ratio that could not be reached in an online environment. For example, at the access control in a metro station in peak hours. In today's webinar, we will focus in understanding the use cases for using CBDCs in dual offline transactions. What are the main challenges and risks for performing such transactions? Do we already have the necessary technology? Will it be safe? Are there any advantages in using CBDCs rather than other means of payment in dual offline transactions? As you can see, this is a very exciting topic. With no further delay, let's move to our panelists. Each one of them will have 5 minutes to share with us their initial considerations on the usage of CBDCs for dual offline transactions. Our first speaker will be Mrs. Tania Hesdorfer. Tania is a business development professional with a passion for public digital currency. At GND, she is Director of Business Development for central bank digital currencies. In this role, she engaged with several central banks worldwide. Prior to joining G+D in 2018, Tania was driving the international expansion of a RegTech company. Tania holds a master's degree in international management and business administration from the Steinbach School of International Business and Entrepreneurship. Please, Tania, the floor is yours.
Thank you for this kind introduction, and I'm honored to speak at this panel on offline capabilities for central bank digital currency today. For everyone who doesn't know GND as a company, we are a global security technology provider with extensive experience in enabling secure payment. So on the one hand, in the physical payments field, by providing banknote security features, processing machines, but also in the electronic field of payments. So for example, we invented the smart card, which technology is today used in all credit and debit cards worldwide. We also provide trusted connectivity. We safeguard identities, as well as protecting digital infrastructure. And as such, we have a vast experience and knowledge in-house that is required for a central bank digital currency technology. And with GND Filia, we provide a holistic retail CBDC solution that is currently implemented with various central bank partners worldwide in pilot projects, for example, with Bank of Ghana, and we are among the finalists of the Global CBDC Challenge conducted by the Monetary Authority of Singapore. And our Filia solution follows a token-based design that comes with various innovative features, and one of them being that it allows for consecutive offline payments. So meaning that a user can make a payment from person A to person B and to person C without access to electricity, to connectivity, or to the internet. And it works both on smartphones and smartwatches, as well as on hardware wallets, which I will touch upon also later in the discussion. And before we started to develop our own CBDC solution, we were conducting numerous workshops with central banks worldwide to learn about their requirements for central bank digital currency. And the possibility of conducting consecutive offline payments was actually one of the mostly discussed requirements, while at the same time also being the most challenging. And of course, on the one hand, the option for offline payments was important to many central banks, since a CBDC as legal tender should be available in any payment scenario, even if there's no internet connection, or it should be available in remote places, or also during power outages. And on the other hand, financial inclusion was another key design challenge for CBDC. And we learned that a central bank issued currency cannot rely on users to own a high-end smartphone, or users to be technology savvy or well educated, or merchants to have access to high-end terminal devices, as well as users to have stable access to internet connectivity. And this is why a truly inclusive CBDC has to offer wallets for the unbanked and underbanked population, meaning that it also works without having a bank account, that it is simple and intuitive with its user interfaces, but also that it allows for low-cost access devices for merchants, and of course, the offline payments functionality. And this is why we tailored our solution according to those needs, so we can cater for various use cases that are required. And we envision use cases where even offline, a end user wants to manage a wallet, wants to pay another person, or wants to check the transaction history. And also, for example, merchants, even offline, want to have the ability to accept payments, securely store the CBDC, but also operate when the internet connection might be unstable or even non-existent. And these were just some of our many thoughts we took into account when developing Filia. And I look forward to discussing more in depth about this throughout this webinar. And I'm grateful for the opportunity to speak today. Thank you very much. Handing over to the next panelist.
Thank you, Tanya. And now you hear Mr. Harish Natarajan. Harish leads a global team working on payments and market infrastructure topics in the World Bank Group's Finance, Competitiveness and Innovation Global Practice, the FCI. His work spans payments and market infrastructures, financial inclusion, digital ID, digital economy, and fintech. Harish represents the World Bank in several international working groups on these topics. He is co-chair of a CPMI World Bank task force on payment aspects of financial inclusion. Harish is also on the editorial board of the Journal of Digital Banking and is a guest editor at the Journal of Payment Strategy and Systems. Please, Harish, the floor is yours.
Thank you, Ricardo. Thank you for the opportunity to share my perspectives on this topic and for the kind introduction. So let me share a few remarks from my side. Many of the points I will convey are aligned with what Tanya was mentioning. So I think fundamentally, if we are looking at a retail CBDC, and then by definition it is legal tender, and then that places an obligation that it is usable in a variety of contexts, even in situations where, even in parts of countries where there might not be access to electricity and telephone connectivity, and then also in the event of natural disasters and things like that, where so this connectivity kind of issues can come up in any part of the country. So I think that is from a fundamental perspective, I think that capability is in some sense critical to support the legal tender status of CBDC. There is also a few other angles to consider from a financial inclusion perspective. In many cases, the traditional approaches used for financial inclusion, say relying on non-bank providers, agent-based models, kind of low-tier KYCs and so on, ultimately still depend on some degree of telecom availability, though you don't need necessarily kind of broadband and so on. You can rely on USSD capabilities and text messages in some cases. But even that places a limit on how much you can achieve based on current coverage of telecom services. So I think there could be some pockets of countries which currently cannot be covered by existing approaches where offline capability could help. And then one should also look at it from the perspective of if everything moves to digital, then we need to have, and the usage of cash really comes down, then one needs to have an ability to move offline if there's a disaster, if there's any, as a backup arrangement. So I think even in that context, I think this could be attractive. But having said that, I think particularly when we talk about from a financial inclusion perspective, the very same issues which impact financial inclusion in terms of the cost to the provider to service individuals, the cost of maintaining and managing the access points and so on would exist if you move towards an offline capability, in particular relate if it requires very sophisticated kind of instruments with the end user for the merchants, and then also with respect to kind of maintaining it, distributing it. All of that will add to the cost. And so one has to see whether on the one side there are positives, on the other side, depending on the design choice, it could actually become, it might not be viable, right? So I think one has to look at where the trade-off really lies here. And then the other aspect to consider is whether offline is an additional feature or is it the main feature of CBDC. In many cases, it is perhaps an additional feature where you have a regular traditional payment means to use CBDC in an online manner. And then when you need to, you can switch to the offline capability. And this might potentially be an approach to address some privacy concerns where some people might want to move certain transactions to an offline environment within limits, within, of course, conformance to all the prevalent AML CFT norms. So this could be an approach which could help in that regard. I think one point is worth reflecting. This topic of offline is not new. It has existed for some time, though in certain contexts, like transit payments, for example, offline payments has been the norm. At least one side is offline. And then also in the 1990s, there was a big push by some of the card majors to introduce offline capability. And there's quite a bit of pilots, quite a bit of work done at that point in time. So some of the technology exists and it did not work at that point in time. Maybe the time is right now, but one has to really evaluate in terms of the past experience versus what has really changed now and what will make it different at this point in time. There is, of course, a distinction between offline payment in a closed loop environment versus offline payments in an interoperable environment where the providers on the payee side and the payer side are different. There are different reconciliation issues which come in, and then also to maintain the legal sanctity of a CBDC in terms of a legal obligation of the central bank poses particular challenges when it comes to kind of a truly interoperable environment in an offline context. So those would be my initial considerations, Ricardo. I look forward to the discussions. Thank you.
Thank you, Harish, for sharing your thoughts with us. And now we will hear Mr. Michael Wagner. Michael Wagner is a partner in the banking practice at Oliver Wyman and leader of financial services business in South America. Since joining Oliver Wyman in 1996, he has built up expertise across an array of key issues in capital markets and digital finance, central banks, and regulation. Michael holds a PhD from Cambridge University. Michael, the floor is yours.
Thank you, Ricardo. Just as a background, Oliver Wyman is a consulting firm, and our clients span public policymakers and banks and payment institutions and so forth. What we are doing at the moment is because the demand for CDBC and CDBC designs is great, and understanding the possibilities in it, what we're currently doing is we are writing a white paper on design options on the policy side and how that better combines with the technology elements of CDBCs. Because in our view, and I think it was mentioned, before, the use cases really should define the use of CBDCs, because the technology to some degree is mature, but in other areas is less mature. So I think central banks will have choices and will have to think very hard in terms of how they put CBDCs in place. But for this discussion, I think three issues are relevant, and I get to the transaction model a little bit later, is the circulation model. So is it an account-based model, or is it a token-based model? The technology, is it a ledger or a centralized ledger or decentralized ledger? And the architecture is equally important. Is it a direct liability of the central bank or direct interaction of the central bank with the end user, or is it intermediated? From our point of view, what we're seeing emerging is a two-tier model, where it's an intermediated model, where you have online security, which I think everybody would agree is much stronger than offline. So you have an online model where basically the security is higher, and you have an offline model operated by wallet operators, right? And for the design of the offline capability, it's really to have resilience on three levels. Is it, is the token or the electronic identity of the digital currency resilient and safe, right, against counterfeits and so forth? The hardware is important. We discussed that not everybody will have access to mobile devices, become an important point here. And the transaction itself, how to make the transaction secure. So those, in our view, are the three different elements that need to be looked at. I think there is a fourth element, which to some degree is more cultural, but is equally important, which is usability. So, for example, will people be able to see how much they have saved in their accounts, right? For example, right? How much is left to spend without an access to electricity, for example. So there is cultural elements around acceptance that equally need to be solved. And then the second point, a large point for us, is to balance anonymity and traceability with security, right? So here there will be trade-offs will need to be made. We've seen solutions where you have levels of ID verification and sizes of transactions, right? Because I think you will have to assume that some level of bad actors will be able to access it. So the question is, how much would they have access to in the worst case, and how quickly could you stop it? Right? And then the economic model that Harish also mentioned is important, because today the central bank provides the paper money, free of charge. So it's a service to the community. The banks provide the management of such monies in ATMs and so forth, largely free of charge, but not fully free of charge. So there's a large amount of money spent on paper money. The question really is then, if we want to make this cheaper in terms of digital, where does the investment come from, and how will it be maintained? And then the last point also, in terms of, as we said, we are considering use cases. I think it needs to be considered in a broader environment. What use cases can be have to be offline by nature, and what use cases can be actually incentivized through digital connectivity. So the main points here are digital inclusion and digital education. The Central Bank of Brazil, before on mobile payments required in the UMTS auctions, a specific uptime for providers. So I think this is a consideration. And the last consideration that we would put forward here is a national ID, which will be also add additional, or digital ID, which will create additional security feature for offline transactions.
Thank you very much, Michael. Very interesting points. And now we start our Q&A session with some questions, and even from the audience. First of all, is there a relevant need for payments ecosystem to support offline payments? I guess you all mentioned that, but is it really a need? Are there advantages in using CBDCs for these transactions compared to, for instance, using commercial bank money? And it was also mentioned, and well, I'll let to you to decide who want to start with this question that there.
Okay, so I think a priori there is. I think if the central bank currency really is going to be universal, I do think there is a need for having the ability for offline transactions. And if it's supposed to be inclusive, I think you also need the need for communities that currently do not have access to digital or the internet. Although I think it's a governmental discussions as well as to how far the government really should make the internet available to everyone, right? But that I think is a side discussion. But the first point I think is really important. Say there is no electricity, there is an issue of accessing your wallet, and there's no paper money or less paper money. I do think there is a need to be able to support offline transactions, whether that's multiple chains of offline transactions or is then still a question. So how much offline, I think, should be the discussion.
Thank you, Michael. Tanya, any point on that?
I fully agree with Michael's statements. I as well believe that there is a need for a offline capability for CBDC, especially giving the points of financial inclusion and the legal tender status, making it available anytime for everyone. So absolutely, yes.
Thank you, Tanya. Harish.
Nothing new to add, really, to what Michael and Tanya said, but I think we also need to see from the context of broader initiatives which many governments are taking to improve the telecom connectivity across the country, and then improve the availability of some of the utilities and so on. And electricity per se, of course, is essential for a lot of other things, but there have been approaches by which kind of people have been able to use kind of their basic mobile phone, charge it once a day at some communal location, even though there's no steady availability of electricity, right? So there are approaches for that which people have used. So kind of the point really is about if you introduce a CBDC as a means of payment, and then you say that it is equivalent to cash, then if it's not available and if it is dependent on certain infrastructure being available and which is not necessarily guaranteed, then you have a problem, right? So I think that's where I think this offline capability comes in. But whether from an overall perspective, whether offline capability should only be served by CBDC or there are other commercial money options could be available, I think that's a broader question. I think that is it's not about everybody has to provide offline capability, but if the central bank digital currency is being introduced from the perspective of financial inclusion in a context where there are significant challenges in some parts of the country, then I think there's an obligation to also look at offline capability. And then, as I mentioned earlier, just to reiterate the point, that even forget about the challenges related to telecom and so on in parts of the countries, if everybody moves to digital at some point in time, then what happens if there's an outage, right? What happens? So, and there's no ready availability of cash. What happens at that point? I think that's worth considering. And even from that perspective, perhaps it's a good feature to have, though not necessarily regularly used.
Thank you, Harish. Very interesting points. Well, let's take advantage that you are already there. Okay, we see that there are offline wallets that could use another means of payment, but does CBDC provides an advantage? For instance, I guess it was you that mentioned that there could be different payment service providers from the payer to the payee, and what would they accept if we are talking about, let's say, commercial bank money and things like that? Do you see any advantage of having CBDC attached to the dual offline payments?
Not specifically, but then there are certain aspects which come into play here, right? So if you can certainly create kind of offline capability for commercial bank money, you can certainly do that, but then that will necessarily be closed, right? So it could be like, let's for example say a card network X creates this offline capability. All the banks and payment service providers issuing under that brand are able to, of course, kind of transact amongst themselves. But what about individuals who do not have that particular brand, or merchants who do not accept that particular brand? So what happens to them, right? So I think there's a need for some kind of a universal arrangement to which every payment service provider in the country or every individual is able to connect. And I think that if there is such an infrastructure which is already there in the private sector, in commercial bank money, then of course it's fine. But if it is not, then what is the option? Right? I think that's where I think CBDC, by given the way it is defined, the way it is intended to be constructed, can play that role, right? But that's not the only option. I hope you get the nuance I'm trying to make here. Thank you.
Thank you, Harish. Tanya, in terms of technology, are you already there? Is the do-offline solution already mature?
Yeah, that's a good question. So we at GND started to work on the offline payment technology, especially on the consecutive offline payments, from the very beginning of our CBDC developments, and started our first prototyping together with the central bank already in 2019. And since then, we see that the solution has evolved and is currently also used in pilot projects. And I think it's also important to mention that our solution relies on existing industry standard protocols. So for example, to establish secure channels between the payment devices, we utilize the global platform standard. So it's not like we're developing anything from scratch, but rather making use of well-proven industry standards. And we are confident that our pilot projects will further demonstrate the maturity of the offline solution, also in experiments with handling big amounts of data.
Thank you, Tanya. Michael, what is the biggest problem to be solved in providing a secure and affordable do-offline payment structure?
Well, I think kind of pretty much everybody mentioned that you need some form of electricity to be present, right? So be that stored on a battery or on the device itself. I think otherwise the secure transaction protocols can't really be established, right? So I would say, to me, that's really an important element. Then if you have multiple offline transactions, again, it's the unforgeability of the data, right? So again, online you have very elegant ways to solve this, right? Offline, again, this is much more difficult, given if you run this at a national scope, right? So this would be bad actors are not just only economic actors; it's also the security. The national security will be implicated in those cases. So it's really to develop means that keep the offline data packets secure and also avoid duplications of those, right? I think that's the you have the serial numbers on the banknotes. You can do this digitally, but then the real problem is when you have multiple offline transactions on multiple chains, right? To keep that secure, but also to some degree there's a choice here. Should you store the transaction chain, not necessarily with the identity of who made the transaction, but you could have device IDs and so forth that are going to be stored along the chain. So if there is something having gone wrong with the transaction chain, when the transaction goes online, eventually you have a way to do forensics and to basically counteract it. So in my view, those are important things that will need to be solved.
Many thanks, Marco. And actually, this is linked to the next question. And yeah, one of the premises that we have for do-offline is actually that we can continuously use these CBDCs and transfer to each other, as we do nowadays. I give you cash and then you put it forward and so on. What sort of challenge do we face to achieve this? How to find the ideal balance between having long periods offline and keeping the risks acceptable? Anyone, guys?
Yeah, no, I think kind of, in my view, this will evolve over time, right? Because security is an issue that will evolve. So the ways to potentially attack this is by having this two-tier system, right, by having providers of technology and wallet solutions that will also then have to provide offline solutions so that they can experiment with new technologies as they come along. And over time, I would say a prudent way is to limit the amount of offline transactions that you can have. So you could have a counter and so forth, so that you can't have 100 offline transactions, but you start with like 5, 6, 7, right? So, and as security increases and the comfort of all participants increases, you can increase the number of offline transactions.
Maybe to add on that, at the moment, we also see that there are currently technical limitations of the number of transactions that can actually be conducted in a complete offline environment, since any hardware device has limited storage. So this storage will eventually fill up with offline transaction records, leaving no further space and forcing the device to go online to allow it to synchronize the offline records with the backend system. So that's one limitation. And then secondly, as Michael mentioned, of course, the central bank might impose some policies. So even if a device may have space for 20 offline records, due to security reasons, they might want to limit it, for example, to 10 offline transactions. So ultimately, the choice depends on the concrete applications and parameters in the country, such as the internet penetration, payment patterns, but also the fraud rates.
Mm-hmm.
Thank you, Tanya. Okay. Harish, considering the desired features, in particular its usage by the underprivileged, should you foresee mechanisms to recover balances held in a lost, broken device? Is it important?
Yes, no, see, I think that is a very, very important consideration here, and one needs to very carefully think about it. On the one hand, you have situations where you keep paper currency in your wallet and you lose your wallet, and you don't ask yourself. There's no question here, no, that you lost the wallet, you lost the money. Of course, money is not lost; somebody took advantage of it, right? So, and you kind of put the same parallel here to this kind of a situation where you have offline capability, kind of based on something being stored in a device, a phone or a card. And then you lose that, then you basically treat it as a functionally losing your wallet, physical wallet, and in that sense, kind of you have no further claim. So that is one way to look at it. The other way is to look at the end user context, right? So if there are people who are for whom kind of that the kind of small amounts of money is very, very important, and they are basing their financial lives around it, and it was issued under a particular kind of program from the government side, then there is an obligation here. There is the obligation of the government to try and see that they're not being deprived of what is rightfully theirs, right? Because of some device issues which they could not control, and so on. So I think it's a very tough question to really sort out. On the one side, as I said, kind of there's this point about it is to be expected. On the other side, even if it is done under an active government program, then there's a social obligation here. And then also from a general best practice here, I think one should have some means of recovery. Whatever is technically feasible, to try and being able to recover it. If it's a case of something being lost, is there a way to deactivate it? And that's where I think this point about number of offline comes into play, because if you can deactivate a particular instrument, it can still be used as long as it is offline. So then it is important that you're able to at least stop it at a particular point, that you're not wiped out. So it's not just the number of transactions, but potentially also the value of transactions you can do offline, which is also important. Thank you.
Thank you, Harish. Michael, Tanya, do you think that we have technology to meet this challenge nowadays or in the near future?
So I see it very similar to what Harish just said. So it's just like with your banknotes, at least in the offline payment scenario, if you lose it, the money is gone. And of course, there could be some processes covered by insurance, so you can retrieve the money. But basically, I wouldn't at this point see any technology that can recover that. So this is why, of course, the regular scenario would be online payments, where you can also verify yourself against the wallet. and then, for example, recover money if you lose your wallet, because you can actually prove that it's the money, that's your money in this wallet, because it is then connected, for example, to your identity. And I think these are really the limitations that we have to discuss these days.
Mm-hmm.
Thank you, Tanya.
And yeah, I agree. I think I think it's also up to the user to make choices, right? I think today we have bank accounts, so people that that want to keep the money under the mattress can do so, but there's no insurance against it being stolen. So I think kind of, in my view, there is choices that are available, right? And I think Brazil's recent distribution of the COVID funds, for example, required people opening accounts through either Caixa or its correspondence, right? So there is ways to make give access to the almost very broadest community, right? So I think from that perspective, you can put in place this dual feature, right, with online and offline, and then offline, if you lose it, you lose it, but or if it gets stolen, but you do want to also limit the capability here to respend the money, because what we've seen obviously in PIX today in Brazil, right, with the the robberies, the instant robberies, that I think is another feature that is important, that people probably want to enable to have their own security. So I think that there's a lot of positive elements of limiting offline wallets, or the size of offline wallets. We talked about transaction size, but also you need to be able to block it, right? So you need to be able to basically, if you are in a situation of sequestration, you need to be able to do something about it, because otherwise you might be able to put your life in danger, right? Or you might just put your life in danger.
Thank you, Mike. Michael, how does an intermediate CBDC model coexist with a dual offline solution in which the CBDC ledger is kept at device level? Is it, because even when you're discussing distributed ledger, you're talking about let's say nodes in a DLT model, but now we are saying that we have a very tiny ledger in every device, but we are talking about an intermediate model here in Brazil. So can they coexist?
You mean, yes, I think, as I said, the two-tier model, I think, works, right? I think where you basically have, for online, you have you have wallets that people have access to, right? And then for offline, you basically pass the tokens, right, that you create, that are, first of all, put in the wallet. You synchronize offline with your offline wallet with the online wallet, like very much as you would get money at the ATM today, and then you spend offline. So actually, I think it's a good design feature to have, because it does add security aspects to the model. Right?
Thank you, Michael. Okay. Which strategies might help to ensure compliance with KYC, AML, CFT rules, and at the same time provide an acceptable level of privacy in dual offline transactions? Harish?
So I think, one of the fundamental premises under for any AML CFT regime would be to ensure that the individuals are identified. That doesn't, and there is of course flexibility in terms of how you can identify the individual behind that account. There could be certain contexts, of course, you might accept different levels of kind of rigor on the identification side. So I think that is the first point. I think after that is in terms of the kind of the amount of transactions you can do, the value, and so on, and then also kind of whether it is within the domestic context or international. So I think if you talk about offline within the country up to particular limits, then there's a way to kind of conform to existing regulatory frameworks related to that. Now, with respect to privacy, I think here the question really is, even in an offline manner, at some point it has to go online. Mm-hmm. So some information will get conveyed. to the either directly to the central bank or through the intermediate structure. But what information gets conveyed is, of course, can be controlled. But I'm assuming that the timestamp will be there, the counterparty information will be there, either in the form of some ID, which under some due legal process you should be able to get access to. So there could be certain things you can, certain elements of privacy you can build in as part of offline, but by no means is it like an equivalent of cash where you simply are not able to trace anything, right? So there is traceability, and there could be a way of protecting anonymity up to the bounds of the legal framework. Thank you.
Thank you, Harish. Does anybody want to speak on that? Let's go to the next one. Okay. So then again, thinking of the Brazilian reality, would it be possible to imagine different devices for performing dual offline transactions? In other words, would it be feasible that smartphones and card-like devices are used together in offline transactions, taking into account different audiences? Are there any technical security issues for such solutions to coexist? Meaning that maybe having a smartphone is not feasible for part of the Brazilian population because it's just too expensive.
Yeah, maybe I can go on that question. So we basically follow the token-based approach, meaning that you can imagine CBDC as a digital form of cash. So in addition to having physical money you store in your purse or safe or your pocket, you can basically store the digital banknote on any device that comes with a secure element, meaning a chip. So this can be a smart card, and I have some examples here. Just a card where you can store money. It can even be a card that comes with an e-ink display, so at any time you can see the amount of money that is on that card. And this, I think, also relates to what Michael earlier said. It helps to get user acceptance because they can actually trust that there is actually money on that device because it's kind of tangible. We are also currently working on implementing banknote security features into such cards to also transfer the trust that is coming from the central bank by issuing a currency also in the digital world. And of course, there would be also other devices, for example, like wristbands that could be used, which you could give your children that they can just put on around their wrists for their monthly allowance, for example. And of course, the default device could be a smartphone. But of course, since in Brazil, I think 140 million Brazilians own a smartphone, which makes only 66% of the population. Of course, there need to be default devices. And this is where we believe that any hard wallet or any watch can come into play. And when it comes to limitations on the security, we believe this depends on the risk approach that the central bank is taking. So in theory, it would be possible also with smartphones to conduct offline payments, but unless the technology can't be embedded in the secure element of that smartphone, for example, the SIM card, there could be still space for hackers to get into that data. So we recommend, unless there is access to these secure environments, for offline payments to rely on wearables or smart cards that come with a secure element that we can actually access.
Yes, and I think kind of just to add a little bit of Brazilian context as well, I think Brazil has, I can't remember how many POSs, but it has a huge amount of point of sales devices already, right? So I think it is important, in my view, to have variety, right? Because again, to make sure that there is acceptance by various parts of the population, right? The young people will be obviously very easy to use a smartphone. Older people or more remote people, will to some degree might even be hesitant, right? They don't trust necessarily the safety because they haven't really had a lot of experience in transacting on the internet itself, right? So I think to me, having choices on devices is an important feature, but also to have different providers, right? Brazil has payment institutions that the central bank supervises, so enabling those payment institutions to issue different devices for offline transactions, I think is in my view, an important feature to allow the system to develop, right? Because otherwise, I think if the central bank makes the choice, I think it is very difficult to gain acceptance everywhere. And as I said, the other important point is also the maintenance of such devices, right? So the business model of those payment institutions, because CDBC obviously should be free or should be very low cost, right? So then the question is, what other features are going to pay for the security features or the devices that are even used, right? Because today, as we said before, paper money is accessible and it's free, and that principle should, for financial inclusion at least, should be maintained. So therefore, the economic model of the intermediaries becomes a very important feature as well here, as does the proliferation of different design choices on offline wallets.
Thank you, Michael. Well, and taking on your answers right now, one of the goals of the central banks also, of course, reduce the use of cash, paper money, because, of course, it's costly, although you don't face it straightforward, but actually you pay taxes and you have to pay for the logistics and all of it. So we want to reduce the use of cash, but on the other hand, we have to face the normal resistance to change things. So we are used to cash, and then, as Tanya mentioned, we have a card where I have to believe that there is money in there and that it's going to work. How to overcome this cultural barrier? Do you have any hints on what we should do?
Maybe a short comment from my end. I believe probably the key to acceptance is to promote the freedom of choice to the people. So cash as well as central bank digital currency are a public good issued by the government. And I believe as long as people can choose whether they want to pay with cash or with CBDC, there will be a broader acceptance. But if you would force people to move from cash to CBDC, I think that would probably not go into the right direction, and then rather making people a bit skeptical of that technology. So I would promote the freedom of choice at this end.
Thank you, Tanya. Very interesting.
Maybe to add to what Tanya was saying, I fully agree on that point. And I think the goal is not so much, I presume, to eliminate the use of cash, but to eliminate the use of cash where it is simply not the most efficient mechanism, right? So there are contexts where cash might be superior based on the context of the transaction, but also the context of the individuals and businesses involved. But there could be certain scenarios where the same individual might prefer to use digital means because it is more convenient, right? For example, for making a bill payment, it might be more convenient to do it digitally than for grocery purchases, right? So I think the point should be more about giving choice, making it convenient, and then also to ensure that people are familiar. A lot of times, there's also this issue of literacy and fluency with a particular payment instrument, and if they're not confident, then they will hesitate to use it. So I think the focus has to be in supporting them to become more fluent in using it. Then I think it should stand on its own merits, right? So if a particular instrument is better than in cash, then why would people use cash if they have an option, right? So I think that's perhaps the way to also look at it.
Thank you, Harish. Now I have a final question, which is not a question, but a question for questions. Are there any questions that the audience and I are missing? Any tip you want to provide us in developing CBDC to offline transactions? Any hint on besides those ones that you've already given us?
No, I think if I may come in, I think the key point here is also related to the end user behavior, end user aspect here, end user context. There was an earlier question related to the different modes of holding CBDC and transacting. So kind of to give a very, very loose analogy, irrespective of the cost of the wallet, the physical wallet in which you keep the money retains the value and the usability irrespective, right? So you might have a Gucci wallet versus a regular wallet, and the value of the money in it is still the same, and the usability is the same. So I think, so one has to really keep that in mind, and then also true interoperability is really required for this to succeed. You might have different form factors. They need to be able to interoperate. Otherwise, I think the utility of that really goes down. And very often the interoperability context is also between different segments of the society, right? So it's not about smartphone users will only transact with smartphone users. There is transaction with other people who do not necessarily have access to smartphone. So I think one has to really look at that end user aspect, and then I think also need to balance with what is available in the technology today, and whatever is the limitation I think has to be communicated very, very clearly. So if the technology can only allow 5 offline transactions up to say $100, then I think that needs to be very clear, and for people to be able to verify whether they've reached the limit or not. So I think the wizard, the indicator which Tanya was mentioning on the card, things like that could be very, very relevant. Thank you.
Thank you, Harish. Michael, any hints, any topics that you want to raise?
Yeah, no, I think the one we haven't really discussed so much, I think, is the other things that sit around the CBDC ecosystem, right? Like the national digital ID, which I think can solve a lot of these issues. And I think that's something the central bank or any CBDC, any central bank that wants to issue CBDC should at least have a view on what the roadmap of the country is to introduce such an instrument, right? Because I think it does the choices. And the other one is, again, the policies of the government for digital inclusion and education, right? Because I think it goes beyond a pure payment system. It also becomes not just a financial inclusion, but a societal inclusion topic as well.
Thank you, Michael. Tanya, anything?
Yeah, maybe also just some closing words. So maybe from my end, it's more kind of a call to action. I believe the time to investigate exactly such technologies now and try what's possible, where are the limitations, how can we design it so it fits to the exact needs of the country, of the users. The time is now, and we see it in many other countries where central banks proceed to pilot projects where they go live with their CBDCs. I think now it's time for central banks to investigate the topic indeed.
Thank you very much, Tanya. Thank you very much, you all. So we have reached the end of our third webinar, and we will close up with a few words in Portuguese now. Thank you to you all for sharing your thoughts. Very interesting webinar.
I would like to thank all the participants for sharing with us all of your perceptions. Keep your ear to the ground, to our social media, so that you can follow our next webinars on Digital Real. I wish everybody a wonderful afternoon.
Thank you very much.
Thank you.
Thank you.
Obrigado.
Obrigado.